We start today's market talk. Part of what you must learn is how to handle mistakes and new facts that change the odds. Life in part is like a poker game wherein you have to learn to quit sometimes when holding a much loved hand. This is a quote by Charlie Munger. It summarizes the importance of rational decision making and flexibility in face of changes. It's a lesson on willingness to admit that our knowledge may be incomplete or wrong for the sake of making better future decisions. Market outlook. It is going to be another interesting week after string of interesting weeks now since last year or so. So world's chip supply chain is bracing for fallout from China's rare earth curbs. So this is a key news. This came on Thursday. I had highlighted it on Friday morning, but it just nobody bothered about it. And then once Trump retaliated, and then now there is a panic all over. Now, who will be affected? EVs, high-tech electronics, wind turbines, advanced semiconductor industries will all fare constraints. What has happened is China has extended their regulatory control on others' utilization of these resources. It will threaten defense supply chains, uncertainty, and potential delays for companies like ASML and NVIDIA. ASML is Advanced Semiconductor Materials Lithography Company. This is a very interesting company. It specializes in design and manufacturing of photolithography machines used to produce integrated circuits, that is, microchips. The aim of China is to target the semiconductor industry, threatening to stall the chips powering the AI boom. So they are targeting basically US. So Trump has announced 100% tariffs on China and export controls on any critical software. So we are back to where we were in April. So all the good talk is over. Now coming to India, expect a better second half due to festive sales, lower inflation, tax cuts, both income tax and GST, a decent monsoon, improving liquidity, the full transmission of the interest rate cuts, easing of credit restrictions, commodity prices will remain low given tepid global growth and likely RBI rate cut this quarter. So strong reasons for expecting a better second half of this year. And this, for most of the affected companies, Q2 results will really not matter. So don't overreact or underreact to any of the results. This should boost growth and find a reflection in corporate earnings from Q3 onwards. Now, key risk is US tariffs and the associated potential to slow India's export growth. So, if this trend sustains beyond Q3 FY26, that is of tariffs, then it will continue to cloud the outlook for export-oriented sectors, raising implications for employment. Now, what I see is to gauge the sentiment regarding tariffs, I just follow few stocks and see what is their performance, and then because they are totally export oriented, and then you can understand what the environment is thinking about. One of them is Gokuldas Exports. You can easily watch that as a barometer of sentiment related to tariffs. Full impact of GST 2.0 on domestic demand, the consequent potential recovery in private capex, the bottoming out of banking sector stress, and a hopeful resolution of India's tariff situation with the US are all expected by Q3 FY26. And market will be supported on that hope. So Nifty right now, I'll show you this. Nifty is at a critical juncture above 25,200 levels. It has tried to go up 4 times now from since June. Went up, touched this declining trend line and retracted. Then tried to go up, something happens, comes down. So the move up is sharp and the move down is also sharp. Then again in September, it tried to test that declining trend line and then reverted from there. Now it is again doing that trend up. Now let's see what happens from here. But I think we will now again come down a bit and move out uh, from the supports. So what is required is to be able to trade above this declining trend line sustainably to try to go to 26,000 and beyond. Otherwise, this will just keep retracing and fall back to this support of 24,400. So this support becomes critical. If there is negativity, it will fall back. So we have tried this in June and September, two false breakouts and a pullback into the range. So right now it is in a clear range. It's not going down below this 24,400, not going above this. So the easiest, best trade is at the lower end of the range, buy. Something good news comes in, goes up, and at the upper end of the range, sell. So basically, India Inc.'s earnings were not very strong, and margin expansion has kept the earning growth going at around low double digits. But that is also because low commodity price and better margin control, etc. Top line growth has not been there, and that is one of the reasons why there is no rally as such. Let's see this earnings season and the commentary. Mid single digit growth in top line, that is revenues. And the other thing which I wanted to show was the the depreciation of Indian rupee is also eroding the FI return. So that these are the two reasons: one, earning; second, constant depreciation of the rupee, which is leading to negative sentiment with respect to equities. Now coming to FIDI data. So if you see here, FIs have been covering their shorts. So it has come down to 1.81 lakh positions. They have been buying in index futures. So they bought Nifty future position. So that's why the indexes were up. In terms of index options, they are mildly bullish for call options, and they have bought puts. So overall, FIs are still bearish on the market. They have been buying very small quantity of in cash, which is just helped to improve the sentiment. Professionals, proprietary traders are basically not anywhere. They are in between. So they are slightly long on index futures. On call options, they have bought calls, and they have also bought puts. But basically, they are positive or bullish. Clients, if you see, they are long, net long on index futures, and very interestingly, to cover their index futures long positions, they have sold calls on index calls, but they have also sold puts. So basically, pros are indecisive, FIs are bearish, and clients are bullish right now. But from extreme positions, they have changed their positions. DIs keep buying regularly. So we'll see for the whole month or so. DIs have been continuously buying. FIs have turned buyers in the last 4 days. So that has helped the sentiment. They had reduced their short positions near the expiry to around 1.42 lakh. It had increased to 1.98. And after that, they have reduced it, done some short covering because of various factors, and they are turning bullish, as I showed you, slightly turning bullish, which has led to a rise in the Nifty. Coming to US markets on Friday slumped to their worst week since late May, driven by a sharp fall on Friday due to resurgence of trade war concerns. So interestingly, the bond now, if there is a sell-off, so bond yields have also sold off because they are not considered as safe haven. So it has come down to the lower level of the range. If it breaks this, then it should go down. Dollar index strengthened last week, not because of strength of US dollar, but relatively, because what was happening last week was, firstly, the Japanese currency corrected, and European euro also corrected because of the problems in France. So it is related to euro and yen that the dollar strengthened. So it is nothing related to the strength in the dollar. Brent crude declined because trade war concerns, so this will sell off. So it has come down to 62 odd level, good for India. Gold continues its rally, basically uncertainty. But if you really see, as I had written, this is basically a short covering rally. People were short, carrying their short positions over a period of time and then rolling over their positions. And after some time, they couldn't roll over any time. So there's huge demand to give deliveries. And that's why we have seen gold up to 4,000. But I think this trend should continue. So don't try to be liquidate your positions too quickly. So spot gold has hit 4,000, and with more uncertainty coming with respect to trade wars, etc., it should continue, maybe at a lower pace, etc. But no point in getting out of gold. The other winner last week was silver. As I had mentioned, it touched 50, and now it's in a blue sky territory. It has had a steady rise from 2023, but now it has taken off. As a substitute, lot of central banks are buying silver, people are buying silver, etc. So it has reached 50 to the ounce, and this is the point at which last time the selling had come, but last time central banks were not buying. So let's see. Till now, there is so much of interest now that I think this rally should continue. Copper corrected. As this was more of a speculative rally, there is not much of change in demand as such. So it has come down to that support. Now let's see what happens from here. It corrected around 3% last week. Bitcoin had a great fall. It fell around 9% last week. Basically, after the Trump on Friday, it corrected. It had one daily candle of Friday was $20,000. The daily swing. So you can imagine the price is $120,000. It swung from 126 to 106. So 20,000 was the daily swing. $20,000 was the daily swing. That is around 16-17 lakh rupees. Now S&P 500 corrected around 2.5% from this high. It made a fresh high. Similarly, Nasdaq also, because of all these troubles with respect to semiconductors, and Dow also. So let's see how this thing plays out, because now Trump is saying that he will still go for the meet with China, etc. But let's see, this is kind of a posturing before the actual meeting between both the leaders. So they are taking extreme positions for better negotiations. Now coming to India VIX continues to decline. It's at around 10. So nothing much here. Nifty, as I had told you, this is a weekly chart. This is a declining trend line. It went up around 1.5% last week. Good, the green candle, but I think it should face resistance at these levels. And it's not able to go above that. Earnings have also not been very good to power this index up. If you see the daily charts, it has tried this move many times. It is not able to go up, but RSI is still 60 odd. I think the first level to see would be 25,200. I think the open will be below 25,200 on Monday. So the next support should be around 25,000. Maybe next week we should see that. And after that, we'll see up to which. But the support should be in this 24,500 to 24,400 zone. On the hourly charts, it rose last week, is above the 20 EMA, and it closed positively, and it has taken out with a gap. So this 25,200, it took out with a gap on Friday. So once it breaches this gap, then this thing will again become a kind of a resistance. Nifty Bank is the leading index because of good RBI policy. Since then, this index has been doing well. 2 strong weeks, and it is now, it closed above that resistance of 56,500, and now it is heading higher. So for Nifty Bank, if you see on the daily charts, it has made a inverted head and shoulder. So with this inverted head and shoulder, the the possible technical target should be around 58,800. So this is the one index which can power the Nifty and head to this previous high of around 57,600, which should not be very difficult for it to do that. It has broken out above this neckline of head and shoulder. So let's see what happens. What is the impact? The rally is powered by both actually. This is PSU Bank, which has broken out from the intermediate resistances. So it is going up as such. So let's see if it is able to take it out. HDFC Bank is looking strong. So till the time it is trading above 970, it can try to take out 1,000 odd levels. So it's basically related to the short covering by the FIs. Reliance is subdued, remains at the same level. I think it should correct. Now it is below the 200 EMA. Infosys, as I had brought out, keeps bouncing from the support zone at 1400. So it has again taken off. Now TCS showed only meager profit growth. So that was not good enough. But there is some expectation of a large order for Infi, and that is what is keeping the stock excited. So if it can take out this 1600 levels, then it should go up. Otherwise, it will again come back and test the lower levels. Now, the stronger sector here is Nifty Metals. It has nearly made a triple top, and then it corrected last week around 0.15%. But this is one sector which is in momentum. Now, if the dollar is strengthening, then there is a likelihood of correction or with the related to trade tension. So we'll have to see this, but this is one sector which is in great momentum. Autos have halted now. It tried to take out its previous high but failed, and now it is consolidating. Now, next moment will be based on results. The other sector which was moving well was pharma. It has broken above the 20 EMA, strong 2% momentum or move up last week. There are two news. One which came from the US was that there would be tax relief on generic drugs. So all the generic pharma companies did well. And then there was a news on Friday that US Biosecure Act is expected to is not that strong. So it is expected to unlock massive opportunities for Indian CDMOs as US drug makers shift their outsourcing partners from China to India. But let's see how much this good news can carry the stocks. The defense was subdued kind of thing, but it is not corrected. Till the time it on the weekly chart, it's above the 20 MA, it remains strong. It's a kind of a defensive sector now. Midcaps were up 2.78%, so that was positive. Basically shows that retail was taking interest. Small caps were up 1.43%, again good. So there is a momentum here. So what overall, if you see, this range which I showed you for Nifty would now get resolved basically on news, on some news. Right now it will come down, but it will not resolve the range because right now we are in a consolidation band. Rally attempts have failed. So now let's see, we will pull back into the range again. I've spoken about TCS and Infi. Nifty Bank has to lead now. Both private banks and PSU banks did well last week. The problem is that Nifty PCR is 1.4. So market is slightly overbought or biased on upside due to some FI buying in cash and short covering. So that is the vulnerable part because there is massive put writing, and there would be some kind of unwinding which will take place, which will bring the markets down. Gold rally, as I mentioned, seems like a short covering. So I think there's no need to take profits there. Now I'll cover two stocks. First is Jyoti CNC Automation. Firstly, CNC is computer numerical control machine. All manufacturing equipment nowadays use pre-programmed computer software to control movement and operation of factory tools. And this is the company which makes these machines. This is not the only company. There are others also in India. These guys have a free around 10% market share. So they were inception was in 1989. Leading manufacturers of CNC machines. They have foreign subsidiaries in France, Germany, Canada, and Turkey. Manufacturing facilities at Rajkot and one plant in Strasbourg, France. Wide variants. They have made around 135,000 machines. Installed capacity to manufacture 6,000. They are doing capex. Robust order book, 4,400 crores. Is the third largest CNC machine supplier in India with a market share of 10%. Specializes in production of high precision CNC lathes, vertical machining centers, horizontal machining centers, and custom automation solutions. It serves various end markets including aerospace and defense, EMS, general engineering, autos. So if you want to play aerospace and defense and EMS space, then it's a good substitute to play that space instead of getting into any particular company. EMS industry has huge potential, requiring about 1 lakh machines over the next 5 years. Aerospace and defense opportunities remains very strong in Europe, with significant increase in defense spending and continued increase in aircraft production. They are focusing on manufacturing of high-end machines, effectively filling up the demand-supply gap. It is likely to help increase the share of domestic CNC machines to 60% by 2027 from 54% in 2023. So lot of machines which are high-end are imported in India. And the point is high-end machines have higher margins. It is expanding its capacity by 10,000 units from 6,000 to 16,000 units with a capex of 450 crore by June 26. Current order backlog, as I told you, is 4,410 crores. So they do around 2,000 crore revenue per year. So 18 to 24 months revenue visibility. Expect orders to grow at around 20% CAGR, led by significant pickup in EMS orders and continued traction in aerospace and defense and autos. So now just remember that last quarter, they just grew the revenue only by 13%. That led to the decline in the stock. EBITDA margins also went down because of higher cost, etc. Though the gross profit margins was higher, but EBITDA margins went down. The income was supported by higher other income as compared to previous quarters. So that showed better profits, but that has been discounted by the market. So remember this, just 13% growth, and they were talking about 30 odd percent growth. So 400 odd crore. So last quarter was tepid. Now order book, if you see 4,400 odd crore order book, majority is aerospace and EMS and auto components are the general engineering are the other major heads. Order intake is expected to grow at greater than 20%. So order book is expected to grow. It is roughly 4,400 crore, but it is expected to grow with fresh orders coming in and so much of demand. They are talking about 30% revenue growth. Now, this is what I was talking. If the revenue growth last quarter was 13%, so they will have to work very hard for the balance part of the year. So they are talking about, they did around 1,800 crore, and they are talking about 2,400, 2,500 crores in FY26. So that means they have to perform very well in this next 3 quarters. EMS revenues are expected to go up roughly to around 25% by FY28. And others, aerospace and defense, which is a majority sector, is expected to come down. Now, if you see, they did around 1,800 crore revenue in FY25. So they are expected to do around 2,469 revenue in FY26 and around 3,100 in FY27. So they're expected to grow at 30 odd percent CAGR. So that expectation got negated in the first quarter of the year. EBITDA margins are coming down, but they are expected to remain in this 25-26% range. Because they are doing capex, so the interest component is higher, but it is expected to come down. EPS, they are expected to do around 18.3 to 23.8 in FY26-27, taking a mean of around 20 odd at 50 times with this profit growth so if you see profit growth 30% and revenue growth of around, even if you take 30%, ROEs I'll show you is around 20% plus. So at roughly 50 times with a high profile sector, around 1,000 should be the fair price for this stock. So as I was telling you, EBITDA margins are expected to remain in this 25-26% range. ROE is decent. ROE, ROC 20% and up and going up. So basically the thing to be noted is that 30% is expected revenue growth, 30% plus profit growth, and 20% ROE. Hence, the stock can trade at decent higher Ps. So 20 odd EPS, if you see with the visibility and order book which is there. So finally, it boils down to execution. So at 20 EPS as a mean of 26-27, 1 year forward target should be around 1,000. Now, this stock had gone up to 1,400, 1,500 levels at peak euphoria. And then it corrected in June. There was also a PE selling. So after that, the stock made a low at around 850. Now it is moving up. Last 2 weeks, it has gone up with decent volumes. So it's reached that 1,000 levels. In my opinion, around 1,000 is fairly priced. So every dip is a buying opportunity, but it is right now fairly priced, and any dip in performance will impact this stock very severely, and it can go down to the 750 level. So if they perform well or they surprise the market, then it can easily go up. It has now come to that cusp of wait and watch level of 1,000 odd. So let's see what happens from here. Now the other interesting stock is transformers and rectifiers. It is a very interesting stock which has been consolidating for a very long time. It is headquartered in Ahmedabad. It's a prominent player in manufacturing of transformers and reactors in India. It makes single-phase power transformers, furnace transformers, rectifiers, and distribution transformers, specialty transformers, series and shunt reactors, mobile substation, earthing transformers, etc., solar application transformers, green hydrogen application transformers, operates on B2B model, catering to power generation, transmission, distribution, and industrial sectors. It has an installed capacity of 40,000 MVA, and global footprint is there in 25 plus countries. So now if you see here, they did around 1,950 crore revenue in FY25. So, and they are saying that they will do at least $1 billion of revenue in 3 years from here. So you can imagine they are saying that in 3 years they will become 4x. Now, as they are improving the quality and the skill sets which are coming up in transformers, the EBITDA margins have nearly doubled, and that is driving the profit. And PAT margins are nearly now 9.44%. They have a decent order book of 5,246 crore. So that will ensure at least 2 years visibility to know what they are targeting, at least 1.5 years. Order inflow was 665 crores in Q1, and they're saying around 18,000 odd crores of inquiries. So transmission and distribution and high voltage transformers demand is going to remain strong through current decade. and no oversupply risk is anticipated. I'll show you this. It is a cyclical thing, and I'll show you why it matters. High transformer pricing today is driven by short supply in high voltage space, 400 to 765 kilowatt. Expected revenue CAGR of 51% over FY 25-28 and operating margin improvement to 17 to 18% by FY 27 versus 16.2 in FY 25, translating to an EPS CAGR of 58% over the next 3 years. And FY 27 likely EPS is around 17 or 17.6 rupees. Now they have started construction for new 22,000 MVA capacity expansion at Moraiya, which is in Gujarat. Capacity expansion of CRGO processing unit has started. Now CRGO is a very interesting part. It's a cold rolled grain oriented electric steel. It is used to make core and power distribution transformers. So the problem what all these transformer companies were facing was the availability of CRGO steel, which had to be imported. So now they are trying to do some work related to that, so as to improve their supply chains. So as I showed you, they did around 1900 to something crores of top line in FY25, and their revenue guidance is roughly 3500 crores in FY26 only. If they are able to somewhere come close to that, they should do well. Right now, market is watching if they are able to achieve their revenue guidance, and they have guided for $1 billion in revenue over the next 3 financial years. So let's see. Now, what happens with transformers was the previous cycle of capex cycle was in 2004 to 2008 and 9. Now, because of huge demand, the margins went up to 19%, and then there was a dip. There was nothing, no demand, no growth for 10 odd years from 11 to 23. And now again, this cycle has taken off. So what is expected is again, the operating margins will expand to 17% plus because there is a huge demand and revenue, etc. will move up. So they are expecting, as I told you, strong revenue growth around 50% per year with them, and with higher margins, so the profits will grow. Now, let's see the demand. This is the target in India for as per the requirement in terms of requirement for various transformer requirements. So this is for 220. This is in terms of MVA. So this is for 220 to 230 kilowatt, 400 kilowatt, and 765 kilowatt. So what has been achieved is only limited. So demand for FY 26-27 is going to be strong in terms of MVA. So there is a huge opportunity for all of them. And as I told you, in the range of 400 kilovolt to 760 kV, there is very less competition within India as such. So this is where this company gets better margins and better revenue potential. Now coming to their financials, in Q1 FY26, they did around 64% growth. But still remember, they are targeting 3,500 crores of revenue in FY26. So they have just done 529. So even if they do 3,200, 300 also, so next few quarters are going to be exceptionally strong for them. EBITDA was up, EBITDA margins improved roughly around 5.56%. And that's why the EBITDA was up 135% and the profit went up to nearly double, 2x. And PAT margins also became double because they're getting better margins for high voltage transformers. So they are making niche transformers all over. And if you see here, basically 315 MVA, 220, 253 MVA, and they have made this 333 MVA auto transformer dispatched to National Test Station, Bina, India through Power Grid, highest AC voltage in the world. So they are doing good niche quality work with the requirement of these transformers in India. They are expected to, though they are saying 3,100, 3,500, but if, what is expectation of the brokerages are around, they should do around 3,200 crores. So they should do a EPS of around 11.9. In FY27, they should do around 4,600 crore with a EPS of around 18. So they should do a revenue growth of around 50 odd percent, EBITDA growth similarly in the same range, and profit growth next 1 or 2 years would be strong. So considering this, a mean of, even if you take FY26 EPS at 11.9 or 12, at 50 times, it's, and even not even discounting FY27, at 50 times with this kind of a growth, they should easily trade at 600, right? So this stock, if you see, it went up above 600 in beginning of 2025, and then has declined, and then has been consolidating in this range of 450, 60 to 520, 30, 40, all these levels. So there's a long consolidation. And if you can see the same with the respect to the RSI also. It is below on the daily chart, on the weekly charts, it is below 50 odd. So there is not much of momentum. And volumes are also not very high. Like if you see here, it went up with high volumes. So interest has to grow in this stock. Right now, I think everybody who wants to owns the stock. So new buying has to come to push it upwards. But it's it's trading, in my opinion, not very expensive as such with the growth potential which is ahead. So every dip below 500 is a opportunity to accumulate this stock. Like now, next 2-3 weeks, you will get a lot of negative sentiment. So then, because with the rest of the market, this will also correct. So if it comes to this 440, 450 levels or 460 levels of around 50 EMA, that should be a good opportunity to buy it in a slow manner. I have finished. We'll take questions now.
Tarun,